You know, there are consequences when stock prices get crazy and they're so high that they don't keep pace with valuations. Now, we're hearing for the first time, oh boy, stock prices are overvalued. All these AI stocks are overvalued. But we haven't been hearing that since April. Remember, this week was the first time there was a wake-up call when we had that pullback. And what is going on is this. Yes, we can have a crash. Now, don't throw stones at me. We can have a crash. But you got to remember, right now, the reason we are not seeing corrections, we're not seeing crashes, we just see every day almost a new, an all-time new high in the S&P and the NASDAQ, is because, as I've told you, we have so much money that we're putting all this money into the money supply so that they can take that money and punch it into the margin debt accounts on Wall Street so that the FOMOs, as they call them, okay? What are FOMOs? These are traders that have little knowledge. They're really gamblers. And they're afraid that they're going to miss out on this next move on NVIDIA or some other stock. So what's been happening is they're not paying attention to the valuations. They're so tied up with, I got to buy the stock, got to buy the stock. The prices are going up on these stocks. And the big institutions, the pension funds, the hedge funds, the wealth funds, they're all dumping their stocks, their tech stocks. But we don't see the S&P going down or NASDAQ going down because the FOMO crowd, they're so fearful they're not going to catch these stocks. They jump right in and buy them, and right at the peak, because they're worried they're going to miss out. So when this happens, all of a sudden the valuations, again, that they're not keeping pace with the valuations. The prices of these stocks are crazy. That causes profits to drop. And what's going to eventually happen, these margin accounts, the FOMOs, we never had margin accounts this high. They're going to turn around and panic when they get their first margin call. Sell, sell, sell. That's what they do. So, but again, remember where this is coming from. If you just go back to April to where we are today, where the S&P went up 35%, no one cares. No one ever looks at it and says, gee, wait a minute, this doesn't make sense. And here, listen to this here. Take a look at here, this chart right here. This chart right here shows you, okay, the margin debt right here. Here's the S&P going up. But why? Because the margin debt's going up. Just what I keep talking about. The margin debt keeps going up. If we pull that margin debt away, the market's going to crash. And when would that happen? Is when all of a sudden they start panicking and the companies that are doing stock buybacks, all of a sudden they stop and then they say, because right now corporate debt is huge. And if they stop with stock buybacks, that means stock prices will start going down. And the fact that when stock prices are so much higher, okay, and can't keep up with the valuations, all of a sudden panic starts setting in, and the prices go down, and also margin calls, and it's over. It's how it works. And you can see it clearly here. Without that margin debt, this market would be going nowhere. So we're starting to get a little bit of noise about valuations. Now, I've been telling my members, the reason gold shot up so much, because gold gives you a warning. Gold tells you something's wrong with your stock market, something's wrong with your economy. When gold is going up that high, and here it is, okay, gold is still undervalued. Gold is still undervalued. I know we're in a pullback. Of course, you're going to get some profit taking at some point, But this chart shows you right here how gold is still undervalued. But more important than that, it's telling you, gold's telling you, hey, everybody wake up, there's a problem. There's a problem with the market. There's a problem with the economy. There's a problem with valuations. These stock prices are so crazy because of the FOMOs, so fearful of missing out. This happened back, remember, the dot-com days when the NASDAQ went down nearly, 70, 80%. So, yes, we can get a crash. Now, don't stone me for saying that. We can get a crash, but in the meantime, they're going to do everything they can to increase the money supply, to keep giving these FOMOs margin debt, to keep buying the stocks that all the institutions are dumping, and they've been dumping. That one day is going to occur that all of a sudden, everything's going to just stop. Corporations aren't going to do stock buybacks. All of a sudden, the stocks start going down. Margin accounts are called. They say, oh, just sell my stock. And then all of a sudden, you're right back into a 2008. Now, what do you do? Now, they've been telling you, the professionals, the jibber jabbers, oh, just buy and hold. Diversify. If you diversify, we can diversify our way out of this and buy and hold. Are you kidding? Even Warren Buffett will tell you. If you diversify, you're going to diversify yourself right into bankruptcy. So that's what's going on with the market right now. So watch those stock prices. The more they go up, and the more they start crowding the stuff out. I mean, it really gets really wild. So just again, your best defense is know how to sell short, and we'll help you to do that. Okay, we've been teaching people like you since 1998. Learn how to sell short. Then you don't worry about these things. Okay. All right, I'll see you on the charts.